Hello traders, the title of the video is Mastering a Top-Down Trading Method like Top Technical Traders, Part 2. In the first part of this series of video, we were talking about the long-term trend, the medium-term trend, and the short-term trend. And I was saying to traders that if the long-term trend is bullish, all right, and there is a pullback, we go to the medium-term trend, a medium-term time frame, and we wait for the medium-term trend to align with the long-term trend. If the medium-term trend is aligning with the long-term trend after a pullback or a rally, that is the trading signal. We will enter the trade when the short-term trend is also aligning with the medium-term trend. This is what we have discussed in part 1, talking about how to master, or mastering a top-down trading method like top technical traders. I hope you have already watched the full length of part 1 before watching part 2. In part 2, I want to continue with this discussion, an essential topic for all technical traders that want to trade like a pro. As I've been saying to traders for years, one cannot, trade like a pro if one does not understand or master a top-down trading method. It's very easy to understand the topic of top-down trading method, but it will take some time before one master it. Be very patient with yourself. Use a demo account. Practice until you get there. Very, very important. So in this second part, what we want to talk about a trading setup. So I talk about this all the time. Some traders understood it, talking about understanding very fast, but now we are talking about how to master it. So I always say to traders, look for a trading setup on a higher time frame, then go to the signal time frame, and if the signal is fired, you go to the entry time frame to enter the trade. So traders say, John, what are you talking about? And this is what I'm going to explain again one more time here. As I explained to you, it will take some time before you master it. So I have one example here using a stochastic pattern. This is a bearish stochastic pattern when the stochastic was first oversold, and then the stochastic display a higher low without reaching the overbought zone. So that higher low must be formed, at the time when the stochastic did not reach the overbought zone. Here it is. So the stochastic was oversold, then display a higher low. Stochastic did not reach the overbought zone before it displayed that higher low. If the stochastic finally reaches the overbought zone, that's a bearish stochastic pattern. So I talk about this. So if you want to know more, I talk about two specific stochastic patterns at the stochastic-markd.com. In fact, we have 13 specific stochastic patterns. One thing, I'm amazed because some traders come and buy the 24 SP trading material, the trading material that reveal the 13 specific stochastic pattern, but very often those traders do not ask question. Why? Please ask question. Ask question about those patterns, because I record videos to answer questions. All right, so do not hesitate to ask questions. So in fact, I can give more explanation about this stochastic pattern. It's based on a minimum price move is free. It's based on a market stable data. Minimum price move is free. All right, so first move, second move, and third move. Draw the line. Stochastic overbought is pointing to us a resistance level. Here it is. Draw it. So you say priority to bullish signal above that line, a priority to bearish signal below. So stochastic pattern is formed. The pattern is formed. Here it is, completed here. We know this pattern very well. We want to sell here. So now we are talking about a top-down trading method using a setup, a trading setup, a signal, and a low-risk entry point. So now we see now on the daily chart for the Euro British pound, this is a bearish trading setup on the daily chart. Now, how do we apply a top-down trading method after we have identified a trading setup? So here it is. So the setup is in place. All right, we draw the line, resistance, okay, prior to bullish signal above, prior to bear signal below. Anytime you see a setup, draw a line. Prior to bullish signal above and prior to bear signal below. So the setup is completed here. It's a stochastic pattern, it's a bearish trading setup, it's completed here. That's all we want to see. All right, now you see here, as I start turning here, you see after this candlestick bar is closed, you see I'm on the daily chart, this one, this bearish one is closed, the setup is completed, but not before that, it's not completed. Because the stochastic is still here. If you start turning, this candlestick bar, now it's closed, it's bearish. It's not also very long, we don't want it to be too long, this candlestick bar, we don't want it to be too long, or we have to wait for another rally. That's another matter. Here it is. So this candlestick bar is closed, our stochastic bearish chart pattern is completed, where I place my vertical line on the daily chart. So for the daily chart, my verification is completed. I have a bearish stochastic pattern. Now I want to use a top-down trading method. So now I will go now to the signal time frame for a daily chart. So you see here, that's where we are now. So the signal time frame is the hourly time frame. What do you want? A bearish chart pattern is formed on the higher time frame, in this case daily chart. You want to sell. If you go to the signal time frame, you want to see the price going down. Yes or no? You want to sell, yes or no? So the minimum that you will expect on your signal time frame is that the price is coming out of a bullish channel. So there is a bearish trading setup on the daily chart. In this case, a bearish stochastic pattern is completed. We say prior to bullish signal above and prior to bearish signal below. Now we come to the hourly time frame. We want to sell. If we want to sell, price come out of the rising channel, which means if it's coming out of the rising channel, it means that bullish momentum that was in place was diminishing. So here it is. This is your signal right here. Boom, boom, boom. Here it is. You break below that channel and retest it here. Also, you will pay attention to the candlestick pattern here. You see here. So now we have a trading signal here. You see here? That's what's happening here. That's your signal now here. So if you see a bullish trading setup on the daily chart and you want to buy, what is the signal? Go to the signal time frame and you want to buy, the price should be coming out of a bearish channel. Break above, retest. If you want to sell on a signal time frame after you have identified a bearish trading setup on a higher time frame, you want to sell, the price should be coming out of a bullish channel. Break below, retest. Here it is. Why break below, retest? Because we have a bearish trading setup on the daily chart, i.e. a bearish stochastic pattern. We draw the line, we don't want to fight it. Now we go to the signal time frame, we want to sell. It must come out of a bullish channel and retesting here, showing a weakness. So now you see here, you break below, you retest. Be a little bit patient, wait for this common center line also to be kaput. See, run fast here. Sometimes, a lot of traders may not catch this, may not enter here, may not see this signal, but probably they will see the second signal because there are multiple signals. If it's going down, it will be forming lower lows, lower high. So after the primary signal here, we have another signal here to sell. Why this one is another signal to sell? Because the price has formed a new lower low in comparison to the prior low. Now it formed a lower high after it formed a lower high after a lower low. That's the sell signal right there. Again, right there. Wait for the common center line to be kaput. If the signal is fired, you want to sell, you go to the 10-minute time frame, which is the corresponding entry time frame for the daily chart. And again, you are doing exactly the same thing. So in fact, the entry is another signal on the entry time frame. So we are saying that if you want to sell, we want the price to come out of a rising channel and to retest that rising channel, yes or no. That's the sell, yes or no. So On the entry time frame, you are expecting the same thing again. So on the 10-minute time frame, you want it to come out of a rising channel on a 10-minute time frame, on your entry time frame, and to retest that rising channel. If you want to buy, you want the price to come out of a declining channel. Anytime the price coming out of a declining channel is telling us that the bearish momentum is diminishing. Anytime the price coming out of a bullish channel is telling us that bullish momentum is diminishing. Now we want to handle it carefully. Break below, retest, and at least this common center is kaput. As I explained to you, the topic of top-down trading method is very simple. It's easy for trader to quickly grasp what we are discussing. But when it comes to now put into use, a lot of traders may say it's not easy. It's not easy. Right? It's not easy. But don't be too straight with yourself. All right. Maybe you try first time, second time, third time, and you say, oh, it's not working. Be very patient with yourself. Keep working on it. That's it. You must keep working on it. All right. Use a demo account and say, I want to master this. Do you truly want to master it? Why give it a time? Keep working on it. That's it. All right. So when we see a trading setup, like we see here on the daily chart, it's a stochastic bearish trading setup for the euro dollar. We go to the signal time frame. If we want to sell, the price must come out of a rising channel and return that the rising channel, or price must start going down in a declining channel. So now that you go to the hourly time frame, probably if you miss this one, now if you say, why is it going to go down? Well, if it's going to go down, you start forming lower lows, lower high. Here it is. It is now in a declining channel. On the hourly time frame, you know that it's going down. Here is a signal here. You want to enter the trade, you do exactly the same thing that you have done on the signal time frame, on the entry time frame. It must come out of a rising channel when you are about to sell on the entry time frame. All right? So this is what I'm talking about all the time, a top-down trading method, the setup, the signal, the low risk entry point. So we can use stochastic pattern. So if you are TSTW24 trader, you have the 24SP. That's why I add the 24SP trading material to the TSTWS008 trading system. At the beginning, I did not add it to it, but I think it's an essential thing to give traders something to start with. All right, but you want to understand the stochastic pattern, but I don't know why they don't ask me a question about it, but it's there. All right, okay, good. Now we can talk about a double top is a bearish chart pattern. So you see a double top, for instance, on the monthly chart, it's a bearish trend setup. Go to the signal time frame. Again, in price must come, the signal will constitute after you see the trading setup. Your signal on the signal time frame, if you want to sell, the price must come out of a declining channel, must come out of a rising channel and retest it. Or price must switch from a rising channel into a declining channel. See here, it switched. It was rising first. Now we have the setup here. Now it switched. So if you miss this one here, which is the best place to sell, now watch it. You want to sell again, it must be somewhere on the edge. After we see a new lower low, it comes to the top here where the risk is low and the common center line is coupled. This is the signal here. You do exactly the same thing on the entry on time frame. So the trading setup can be either a double top, all right, an inverted head and shoulder chart pattern, a round bottom, okay, a cap and handle chart pattern, can be an linear way pattern, a zigzag pattern is completed, a flat correction, all kind of pattern, a linear way, Fibonacci pattern, crab pattern, all this kind of thing. Those are setups. Now, are you willing to? Is he a bullish trading setup? All right. If it's a bullish trading setup, you want to buy on the signal time frame. The price must come out of a bearish channel. Break a bull, retest, turn around, or form start going up, switching from a bearish channel into a rising channel on the signal time frame. We'll do exactly the same thing on the entry time frame. Hold on a second, I'll be back in a minute. Okay, traders are very simple. So we see a trading setup. If it's a bullish trading setup, we want the price to come out of a declining channel on the entry time frame and to start going up. All right, break it bull, retest, All right, it's turn around. If the trading setup is bearish, we go to the signal time frame. The signal is when the price is coming out of a rising channel on that signal time frame, right below, retest. If you want to enter the trade, we'll expect exactly the same thing on the entry time frame. This is about using a trading setup, the signal time frame, and the entry time frame. So for instance, if you see a trading setup on a daily chart, your signal time frame is the hourly time frame, your entry is the 10-minute time frame. If you see the trading setup, any trading setup, bullish or bearish, on a monthly chart, all right, your signal time frame is the daily chart, and your entry time frame is the hourly time frame. If you see a trading setup on a quarterly chart, your signal time frame is either weekly chart or 3-day chart, and your entry is the 4-hour time frame, all right, or 2-hour time frame. All right. If you see a trading setup on a weekly chart, your signal time frame is either the 4-hour time frame or 2-hour time frame, and your entry will be on the 15-minute time frame. If you see a trading setup on the yearly chart, your signal time frame is the monthly chart, and your entry will be on a daily chart as a position trader. All right, so very simple, a top-down trading method, identifying first a valid trading setup. So what you need to do, don't trade any trading setup. So we talk about high probability trading setup. So you want to know those trading setup. Don't go around just fishing any kind of trading setup. Well, use a demo account, just vary your trading setup that works for you. Which one is more reliable? So you identify them, you like them, they have been working for you after you test it, and now you say, all right, I want to use those ones. So when you anytime you identify any of those high probability trading setup, now you implement a top-down trading method as I explained to you in this tutorial. I don't want this video to be too long, so as a TST WSY usual trader, one can use either those trading setup that I talk about in 2-4 NISE 2-4 trade material, all right, NISE 2-4 trade. So it's a PDF. You can check those trading setup and test them, which one is working for you, which one do you like, all right, and so on. The 2-4 SP trading material, the 13 specific stochastic pattern, those are trading setup. You can look for them on either. Even we can use those one for day trading. So for instance, you can go to the 4-hour time frame and you look for stochastic pattern or specific trading setup, and then you say 4-hour time frame for a trading setup, signal time frame, 15-minute time frame, entry time frame, 3-minute time frame. As always, like I said to you, it's quite easy to quickly understand it, but when we start putting it into use, there are more work that we need to do, talking about the trading triangle, the market first, the sector, before the individual financial instrument, the heart of the trading triangle, the market first, the sector, and the individual financial instrument. So you are polishing it, so you are a technical trader, and you want to master a top-down trading method, but there are other things that will influence the trade, and you want to work on those also, talking about the economy news, the market environment, and so on, putting them all together so you may become a technical trader. So this will conclude this discussion of part 2, mastering a top-down trading method like a technical trader, part 2. In part 3, I'll go a little bit more and explain to traders what they need to look for when they want to master, the top-down trading method. As I promised, I'll be recording 5 specific videos when I will show traders the different approach to technical trading. All right. So if you have any question or suggestion, put in the comment section, and of course, I will be recording another video, to answer your specific question. Take time to use a demo account, practice. It's not easy to master it straight away. It will take some time. Go through the try and tribulation, as they say, all right? You can make some mistake, it's okay, but all the time, polish it, all right, until you master it. So in the first part, we were talking about long-term trend, medium-term trend, and short-term trend. In the second part, we are now talking about a specific trading setup is in place on a higher time frame. Now we use the corresponding signal time frame, waiting for the signal by coming out of a rising channel, price breaking below out of price breaking below a rising channel or price breaking above a declining channel. Those are the signal, and then we expect exactly the same thing, okay, for the entry point. All right, very, very important. Until the next time, enjoy yourself and be very happy. We have recorded this video today because the TSTW SYS008 trader did ask me to explain more the topic of a top-down trading method. So that's why we are recording those series of video, and I'll be recording 3 more video. Happy trading to you all, and speak to you soon. One more time, I would like to say to that trader, thank you very much for asking okay, a very important question.